Hello, hello, hello. Welcome back to another SoCal housing market update. My name is Stephen Mead, of course, with Domicile Real Estate. And kind of an interesting week. This was a holiday week, so things are a little bit unusual going on. And I think we have a lot of people asking some really common questions, right? One of those questions is, should I buy a house right now or should I wait? Another question is, what direction are prices are going? What direction are prices moving? Are they moving at all? Another thing too that we're kind of hearing from a lot of people is, I think everyone at this point is pretty aware. If you've been watching my videos weekend, we are in a very hot market, and I think the question that a lot of people are asking is this increased demand just sort of pent up demand that sort of swelled and now it's going to fade away, or is this increase in demand something that is kind of a more permanent situation, right? I think one of the alternative theories is, that instead of there being sort of this idea of pent up demand that we're going to work through and then it's going to fade away, the idea is, well, maybe our whole market just got shifted. Our normal spring, which typically happens in March, didn't happen this year. So that moved to June, right? Our March stuff, everything just got moved 3 months back and everything's just happening 3 months later than usual. And I think that's a really interesting question. And we're going to go through the data like we always do and really try to come up with an idea of how we feel about that in our local Southern California market. Again, for those of you joining who maybe haven't seen these too often, most of our stats are based on an aggregate of Los Angeles and Orange counties here in Southern California. I like to divide a lot of our numbers into under $1 million and then $1 to $2 million. I think that provides some market segmentation. Right now, we've seen a lot of similar results in those two price ranges, but that isn't always the case. Sometimes those markets move in different directions. So you see like a slowing in the luxury market, but the under 1 million market is still on fire. Sometimes it's even vice versa. That's a little less common. But before we begin, I'm gonna throw a slide up on the screen that I think is something. I'm a big fan of sort of taking things from the news, and when I get questions about it from clients, they ask me, what do I think? And I'm going to put this up here, and I'm going to go ahead and read it out because I think it's important to read this out loud. I think I would absolutely wait until September, October, November of this year before I bought a home, says Suze Orman. And those of you who know me on a more personal level probably have heard me say this in the past. I'm not really a big fan of Suze Orman, and not for the reasons that a lot of people think. And I'm gonna go around and say this because I think it's really important, needs to be said. I think a lot of people who are in the financial advice business, they love to give what I call always never advice. And what I mean by this is they are frequently telling you to always do this or never do that. And the problem with this advice is I think this works great when you want to be a mass marketer and you want to talk to people on a national audience, right? The 5 things you need to be doing with your savings account right now. And the one thing that I have learned over the years that really has been proven to me time and time again is every single client that we have ever worked with had a unique situation. Every single one of them. Not only did they have a unique situation, but the market characteristics of real estate are incredibly localized and they vary so much from area to area. And this isn't to say that I think Suze Orman is wrong in her point. She goes on to talk about possible trends that might be happening, things like people moving away from cities, having some uncertainty about work from home. I think all of these are sort of valid considerations, but they're also the kind of things that vary significantly from person to person. So for example, I don't work in the San Francisco market, but if I did, and you had a job where you went into the office every day and you said, I really want to live close to where I work, I might tell you to take a pause and see where your company's policy on work from home is going to be before you invest in real estate that is significantly more expensive because it is closer to your office. So I think it's important, and part of the reason why the thesis of providing these market updates is to give you information that helps you make better decisions for you. And I think really that's the cornerstone of good financial advice. I don't think it's something you can sum up in a sound bite or in a tweet. I just don't think that that's really very good financial advice at all to do things that way. And just to kind of prove, exactly how dangerous this kind of always never advice can be, I'll give you a perfect sort of real life example that applies to our market. For example, right now, we have a client who is considering waiting entering the market, right? This is a first time home buyer and they're not sure what to do. And one of the dangers, their job is good. All these things are in line. They already work from home half the time. They don't think that's going to change very much. And part of the thing that's sort of dangerous, right, is we've watched over the last 4 months, our prices have pretty much jumped about 4% since we've been sort of tracking sort of the middle of March. So over the last 3.5 months, we've seen our prices drop or jump about 4%. Well, on a $600,000 house, that's a $24,000 jump. I don't have any first-time homebuyer clients who are saving at a rate where they have saved $24,000. So, I think there seems to be this impression that doing nothing is a very safe option. And unfortunately, that simply is not true. Doing nothing is not a safe option. In fact, doing nothing is in fact making a choice. And I think it's really important when you're trying to decide what to do is to really weigh your options and understand that everything has a risk to it, even doing nothing. And so with that, though, I'm going to kind of jump into a little bit of our numbers of what's going on. Let's go back here again. So we're really seeing some interesting things happen this week. And for me, as sort of someone who's looking at this data, the thing that's difficult for me is, this past week is not a normal week in the sense that it is a holiday week. And holiday weeks are always a little bit funny. Like they're just never typical weeks. So if you compare a holiday week to a non-holiday week, you're sort of comparing apples to oranges. And let me get out my little spotlight for annotations here, and we can kind of go over that. So, our idea of new listings really is stalling out in this under 1 million. We slipped a little bit from last week. My theory is, and I keep waiting for this other shoe to drop, but we don't have any data that it's happening yet. The other shoe is sellers are going to figure out that prices are higher and that buyers are out there, and a bunch of them are going to list their houses at the same time. That hasn't happened quite yet. We're going to, but I think we will see this listing number grow. I feel like it has to happen. It's just a question of when is it going to happen. Same trend in our $1 to $2 million category, right? These new listings have actually slipped a little bit. And our story is even more telling, though, when we look at last year. And guess what? Compared to the same week in 2019, we're actually up. We're up about 6-7% in terms of new listings. So this is in contrast, to weeks in the past. This year has not been as affected by the holiday season as last year was. That's kind of an interesting statistic. I wasn't really expecting this. I actually thought we would still be below 2019 numbers. So these sellers are starting to actually come back into the marketplace. Something else that we talked about last week, I'm going to take just a minute here as an aside is, as of Wednesday last week, we saw, new restrictions come into place. And I think a lot of us realized that coronavirus was far from over. This is going to continue. And I think we're looking at these numbers this week trying to figure out, well, is that having a material effect on the market? Has that really sort of shifted our market trajectory, or are things going the same? And unfortunately, because it's a holiday week with essentially, a 3-day period of time that doesn't have a lot of business historically, it's really hard to kind of overread. You don't want to look too far into these numbers and read conclusions that aren't there. I think that's something that a lot of data scientists tend to do, or rather data watchers and commenters tend to do. But jumping back in, let's take a look and see if this is our listing supply, what happened with our new pending sales. Well, if we look at new escrows, that actually also took a dive. Hardly surprising, it's a holiday week, but it took a bigger dive than the listings. And so there's really two ways to look at this. One is that, are we seeing the beginning of a demand problem? Or is it that we're actually seeing what we've been expecting, which is relative to new escrows, we are in fact seeing those new listings. Those sellers are finally starting to hit the streets. They see what their neighbor put their house up for market for, and it's sold in 4 days, and they think they want a piece of that action, right? They want a piece of that as well. Same thing happened here in our $1 to $2 million category. Things slipped a little bit, not quite as much, which I find interesting. But if you look here, yes, we've definitely seen these new escrows slip a little bit. I mean, we're still above where we were a month ago. So, I mean, if it is a slip, it's not a big one. And again, it's a holiday week. So it's very hard to tell just how much this slipping of new escrows. But if we kind of compare to last year, to 2019, we are doing better than 2019. So, if this is a weak demand market, it really isn't weak compared to last year. And I think it's important to remember that when going through these numbers. Now, before I continue and I show sort of our big graph, our absorption chart, this is the one that lets us know the relationship between supply and demand. I really cannot emphasize how important it is to not overread into some of these things and conclude that because we had a small drop, that means our market is crashing. Likewise, I don't think we can completely discount that as a holiday type of a notion either. Anecdotally, spoke to one of our regular real estate photographers who says he has never been busier. That leads me to believe that we have a lot of listings that are on the horizon that are coming up. So I think next week is going to be very interesting to see these numbers. Do we see a trend in the drop of new pendings, and what happens to these new listings, right? Does that trend continue? Do they keep growing? So here's our absorption chart, right? And I'm going to get out sort of our pointer here. And as you might imagine, we've seen a little bit of a slip on that front in absorption. Just to give you an idea, we went from 93% down to like an 88. 88 is still an incredibly strong number. That is almost the same as sort of maximum absorption of new listings into the marketplace, before you're cannibalizing old listings. So again, these numbers are a little bit conflicting. They kind of mean two things. And I think it's going to take another week before we figure out which of those two things is really happening. For our $1 to $2 million category, absorption actually went up a little bit. That's holding pretty steady. I think it's interesting that our luxury market, this over 1 million market, is kind of doing something a little bit different than our under $1 million market. One possible explanation for that is that sort of notion of job security, that might affect this under 1 million group more. They might be a little bit more subject to this kind of corona news cycle, where when the news isn't good, if we have a bad week, they don't want to buy. But if there's great vaccine news or something reopens, then they're back in the market. So again, I think we're going to have to wait another week to really figure out what's going on here. But even when you calculate this in, frankly, this is not a very big shift. If this is a start of a trend, it could be big, but this alone is really a fairly minor movement. It's just because we're looking at this week-to-week data that we can kind of see the beginnings of something. If we go to our price, we see a very modest gain under $1 million. Our average pending list price went up about $2,000, or about 1/3 of a percentage point. That's still really strong for a week over week. It indicates that we do have market strength. If we look at sort of our list to close ratio versus, let's see, I really need to fix this title. Every week I feel like I make a mental note and I forget. What this graph is telling us is we're trying to see how close to list price are we getting on our listings. And for things that closed in the last week, guess what? We're getting close to that 100% number, which we predicted. But remember, these are deals and transactions that were negotiated a month ago. If it closed last week, it's really a deal from a month ago. When we isolate the very last week, meaning we look at a very small subset of listings that is fewer than 50, we look at things that both were entered into the MLS and closed in the last week. And when we look at that data point, we end up with kind of some numbers that are a little bit different. That's actually dropping. And I'm very curious. I mean, again, this is still over 98%. In fact, we're pretty close to 99%. But you always have to ask, is this the beginning of a change? Because this number was over 100% last week, or is this just sort of a data anomaly? And we're going to have to wait a week to see whether that's happening. If we are looking at our over $1 million or our 1 million, 1 to 2 million, that had a slight decline despite really strong numbers. I find in this 1 to 2 million range, there's just a lot more movement because we have fewer listings. Instead of talking about 1,500 transactions that went into escrow, we're talking about like 400 transactions that went into escrow. So it is a much smaller pool of data. And because of that, we kind of see this number jump around a little bit. Finally, if we're looking at our days on market, that's a lot of times that's a leading indicator of a soft market. You see that days on market number shoot up. We have been at 32 days for 3 weeks in our under $1 million category. I mean, that just, that really indicates a very stable market where houses are selling very quickly. If we look at our 1 to 2 million, we see a similar story. We had a spike last week, but we're down kind of in this low 40s range. Just not a whole lot of movement on that. I mean, this market's still, it's hard to tell whether, when we look at this data, right, everybody wants to be the first person to spot a trend. Is this the beginning of a really big market change? And I think there's just not a strong enough data to really point to that this week. I think last week I told you we were 100% in a seller's market and it didn't look like anything was going to change. This week, I'm telling you, we have kind of some interesting data points. Things might be changing, but it might also just be a little bit spurious data that gets thrown in there because it's a holiday week and we're really not sure about that. Finally, I'm going to do another graph that I've been doing for a little while, and really it's probably one of my favorites. And that is our Affordability Index. And this is the payment on a median priced home. So again, this is our methodology. We calculate the payment on a median priced home using prevailing 30-year fixed rate for that week and a 20% down payment. And what we did is we looked back to June of 2018 and we kind of gave that as our baseline. So that's 100%. So all these numbers are relative to where we were. And you know what? We saw a little bit of an uptick. Our median price jumped. And this is, again, based on Orange County homes, single family plus condos. Mortgage rates actually declined slightly this week, but our median price went up. And the big takeaway from this graph, I think what's really important to look at is to look how much room we still have to go and still be at the same price, the same monthly payment as 2 years ago. And because of that, I don't see a lot of immediate downside of this market. It might feel like houses are really expensive, but because of the way interest rates are, if these interest rates remain low, I see there being a lot of upward pressure on prices and not very much downward pressure. So I would be surprised to see price declines in our immediate future. And it's because of that I have to think in our market, the wait and see approach, if you think that's where the market is, you're really leaving yourself open to kind of two kinds of risk. Risk number one is that this median price is going to continue to climb, and it's going to climb faster than you are saving money, which means you are getting farther and farther behind. The other danger, right, is that while no one is expecting interest rates to bump, the problem is, oftentimes we see interest rate movements that are unpredicted, and this is just the reality of it. And, if you're shopping for gas, right, you're trying to decide every day before you fill up your car, is today a good day to fill up my tank? You can decide on a moment's notice to go and fill up that tank. Buying a house is different. If you decide one day, oh my God, it looks like interest rates are going up, I should look for a house, it might be another few weeks before you actually buy one. And interest rates can move a lot in a few weeks. So you don't have a lot of option to adjust your strategy. And I think that's something important for people to remember in that. That's kind of my advice. Now, if you're a seller, I feel like I've been focusing this conversation on buyers. If you're a seller, the rush of listings, while I am predicting it will indeed happen, it hasn't happened yet. And I think if you're a seller, it's still really plenty of time to kind of get in before that happens. But again, we're going to check this on a week-to-week basis, which is why we like looking at this weekly data. Anyhow, I hope you have found this helpful. As always, if you have questions or comments, don't hesitate to reach out to us. We are here to help you make better real estate decisions, especially if you are in the Southern California market. And we will see you next week.